far, to be fair, we are seeing mixed signals. Right, I was actually in China during the Easter Qingming holidays, and I was in Hangzhou and Shaoxing, two cities in coastal China. The cities were very busy, especially during the holiday season. Restaurants are crowded, hotels are actually very expensive. So I would say so far, we've seen mixed signals. Retail sales is not good enough, but in terms of, luxury, high end, we've seen quite strong recovery. On the lower end, bubble teas, shabu-shabu, those hot pots, we are seeing good recovery. So I think we haven't seen across the board good recovery, but there are some early good signs. And in other sectors as well, like property market, right? Primary home sales year to date is up 13% year on year versus consensus expectation, we're looking at down single digit. And also in other mobility traffic data, subway mobility, foot traffic, generally across cities are up year on year, although logistics and some of the highway freight traffic is not quite back to the 2021 level yet.
So as data is typically backward looking, do you expect April onwards things to improve to all the data points that you're highlighting? I'm looking at the March PPI number, which has also been pretty much sluggish and lackluster. Minus 2.5% year on year.
Yeah, I would say, whether China's economy has a strong or weak recovery, this is the biggest debate of the market, right? Because if we are in for a strong recovery, a full-blown recovery, that consumption is bringing back more business confidence, creating more jobs, better incomes, then China market is definitely very cheap, right? Because PE valuation 11 times is below the long-term average. And if we are in a good recovery year, it suggests multiple has more room for re-rating and earnings should show double-digit growth. But on the other side, currently market investors generally are afraid that we are not going to see a strong recovery, right? Expectation actually is low, and there are a lot of other things dominating on investors' minds, such as like geopolitics, such as, policy focuses. So that's why market's trading where it is. That's why after January, we've seen the market trading sideways. So next few months, it is important to continue to watch the data points. I'd imagine that during April to June, we'll continue to see some, conflicting signals. But if one area that can give people more confidence is continued recovery in the primary home sales, the new home sales, because property sector has so much implication for the broader economy, has so much implication for upstream, downstream sector related demand, financial system credit risk, land sales. So if property market can continue to show strong recovery, I think it might give people earlier indication that we are in a good year of, general economic recovery.